Mavericks. This is Rob Reinhold, and I will be flying solo today. Mr. Ankit Sharma is on holiday, so here we are. So let's get into it. Big week last week. I mean, just a crazy, crazy week. As if this year couldn't have become any crazier. We had a huge, huge week last week, and it was actually quite choppy. Big moves, big ranges on everything, but definitely a little choppy. We had 4 out of 5 down days in equities. So the Dow actually closed positive for the week, and everything else closed off a little bit. Thursday was the story. Now, if you remember last week, we said that we think equities were going to trade down to last week's low, and that's where we'd be right when the CPI came out on Thursday. And that was a perfect call. That's exactly what happened. The CPI report came out hot. As you can see here, the CPI, it was larger on every aspect. The CPI, the core CPI, the year-over-year CPI, as you could see, everything was bigger than expected. And a day earlier, we actually got the PPI out of the US. So inflation in the US is still out of control, and that just means the Fed is going to have to be even more aggressive. But when we take a look around the world, take a look at the GDP in the UK. The UK GDP is starting to fall, and we've had some concerns about the UK economy slipping into recession, along with most of the European economies. On Friday, we did get retail sales from the US. I said it's not really going to matter. It really didn't matter. But again, remember, good news is bad news is good news right now. People want to see economic numbers that are cooling off. This retail sales report, it was better than expected. Look, it wasn't a great retail sales report, but when it's better than expected, it's telling the Fed, hey, this economy is still holding in there, creating jobs, it's too hot, and we need to cool it down. Even consumer sentiment came out better than expected. And so this week, again, we had just some big, big news. Let's talk about the pound, because the pound was the best performing currency on the week. And that came as a little bit of a surprise because of the Bank of England. They came out and said, we are no longer going to be purchasing bonds. Now, this is just such a turnaround because if you remember, just 2 weeks ago, they came out and said, we'll buy endless amounts of bonds. We're going to defend the bond market. We will be vigilant. Like they came out so forcefully. And then literally 2 weeks later, they were like, we're just kidding. Just kidding. We're not going to do that. This is just crazy, crazy movement. And the pound reacted very nicely to that because that was going to be more quantitative easing. And so the pound jumped higher last week. It really, really liked it. And then when we got the CPI report, we got everything runs up. We had the dollar run up to new 20-year highs. We had all the bonds shoot up. The 2-year bond shot up. The 10-year bond shot up. Everything shot up. Now look, on Thursday, all of those things in the morning of the US Open looked terrible. The stock market was down 3%. It looked horrible. And then all of a sudden, the dollar backed off, the bonds backed off, and equities rallied 6% intraday. This is just a crazy, crazy move in one day to have a 6% intraday move. When we look at the charts at last week, one thing is going to stand out to you, and it is that big, huge green candle. For the week, the S&P closed down 1%, the world index down about 1.4%, crypto's down. You can see down across the board. Oil, after jumping 16% last week, it gave up half of its gain this week. But really, the story was it was weak on Monday, Tuesday, Wednesday. Thursday, we had this huge intraday reversal. That candle is enormous. 3,500 up to almost 3,700, 200 S&P points. That's just bonkers. I talked with a lot of the pro traders I know after Thursday, and I said, hey, that looks like a bottom. That looked like a bottom. What do you think? And they all basically said, boy, it didn't have everything we wanted, but it had enough of what we wanted to say that is a capitulation low. One of the things you get in a capitulation low is a very extreme amount of bearishness. The bearishness on Thursday morning was insane. There was so much pessimism, and I think that's why we had this rally. On the video I made for our stock and options traders yesterday, I said, look, I need to see Friday's candle. If Friday's candle is a confirmation candle, means that it was an up candle, a green candle, then that was likely a short-term bottom, and we're likely to trade all the way up to maybe at least 37.80. And if we went through 37.80, maybe even up to a 50 period moving average here on the daily chart. However, if we get a retracement, if we lose half of Thursday's gains, that is no confirmation, and that is likely a one-day move. I didn't know which way it was going to go, and I said, look, let me see Friday's candle, and then I'll give you a good idea of what I think. We now have Friday's candle, and it was not a good candle. It is saying that this is likely a one-day bounce that we saw on Thursday, and that the bearishness is not over, that we did not reach a short-term tradable bottom, and that there's probably some more pain to come. So last week, we talked about the pound up 2% for the week. Dollar was strong and euro was strong. Now, these were the three currencies we said we wanted to be long last week. And I got to say, I ended up having a profitable week, but there was some real choppiness in there. There were some good trades that ended up being no gainers because of the choppiness. It should have been a better week, but the chop caught a lot of my good trades and made them to be okay trades or break evens. The yen, I was ready to look at the yen to go long. The yen didn't prove it. All week long was terrible. So now the yen is in the doghouse. It's now on my short watch list. And I've got to give a shout out to Ankit, because last week we said Aussie, Kiwi are going to be the weakest currencies. And Ankit said, I think the Aussie is going to be weaker than the Kiwi. I said I thought the Kiwi was going to be weaker than the Aussie. Ankit hit it right on the head, and the Kiwi decided to go up this week. There's really no explanation for this, but the Kiwi did have an up week by the end of it. We said we did not like cryptos, and they did not perform at all on the long side. So you can see Bitcoin and Ethereum, they hung in there pretty well, but everything else got clobbered. So let's really take a look at the markets where we are right now in equities. And then we're going to jump into our cryptos, and we're going to jump into our Forex and really build up our trading plan for this upcoming week. The world index, the VT, pretty much did the same thing as S&P. Week, Monday, Tuesday, Wednesday, big jump on Thursday, gave back half of it on Friday. This candle is saying that we remain bearish. If this was a green candle today, I would have come out and said, hey, listen, everybody, that was likely a short-term bottom. We likely have at least a week or two of up movement, and we need to start to shift our parameters as far as just not being on the bearish side of equities and on risk assets. Friday's candle was a disaster. For anyone hoping that was a bottom, Friday's candle is the last thing you wanted to see. So cryptos here, boy, I just really can't say anything about cryptos because they're just not exciting here. I mean, look, the movements are nothing. The good thing you can say is they recovered nicely. Okay, that's it. But then the bad thing you can say is, boy, they gave it all up the next day. Cryptos remain in an overall downtrend. We do not like them at all on the long side, and I think the next leg is likely to be lower in cryptos. If we take a look at our calendar here, next week, it's a much quieter week next week. We do have things like CPI out of New Zealand on Monday, and we also have China GDP on Monday. I actually think this China GDP number is going to be a big number. If you are trading Aussie or Kiwi, I think you should be paying attention to what happens with China GDP on 10 p.m. at Monday night, because I do think that is a very good tradable move. I'm going to be actively trading during that period because I do think that Monday afternoon after Kiwi CPI and China GDP, I think that's going to be a really good trading session. I usually don't trade the Asian sessions unless there's something like this. And now I'm saying, okay, I want to be active on that. Tuesday, there's nothing. Wednesday, we get CPI from both the UK and from Canada. So Wednesday, volatility should start to pick up. Look, the Canadian dollar has been dead. We'll take a look at a chart here in a little bit. There's been no trades on Canadian dollar for like the past month or two. It's just not going anywhere. Maybe this moves it out. So I'm not really excited about the Canada CPI. But again, the UK CPI I think is going to be a better trade. And then Wednesday night, we've got employment change out of Australia. And I think that pretty much rounds it up. So really, Monday and Wednesday are likely going to be the best trading days of the week. So we remain super, super bearish in equities. I wish I could have come on for any of you bulls out there. with some good news after that Friday candle and say, hey, the Friday held, I think that's the bottom. I think it's going to look really good. I can't say that. I can't say that. We gave back a big chunk of that gain. And the way we gave it back was it gapped up and there was no buying all day long. All day long. So there's likely more downside. But we do need to understand the market is very bearish right now. And when things get very bearish or when markets get very, very bullish, they're very susceptible to sharp bounces or sharp sell-offs in a bull market. We are overextended. Any bit of news, any bit of moderately good news is going to cause a 1% to 2% rally in equities. Look, that's going to be sold off very, very quickly. But just realize when we get this pessimistic, this oversold, any little thing can trigger a 1% to 2% rally. So I think what you want to do is always have your stops in place. And if you're waiting for entries, I think you wait for one of these bounces. I think you wait for a rip higher, 1% to 2%, sell that rally. I think that's the best trade you can make out there in equities. We are hearing from the RBA monetary policy minutes on Monday, so throw that into the mix on Monday's Asian session. And then really Wednesday was the other day we talked about with UK and Canada CPI. All right, well, let's take a look at all of our currencies individually on a chart. We're going to take a look first at our cryptos. I'm going to run through these. On the top is our trend score. So we're looking at a daily chart and we're looking at a 20 and 50-day moving average. On the bottom, we have our velocity score and we're using our 3 velocity measures. We're looking at a 13 EMA, parabolic SAR, and an RSI trend. On the trend score in Bitcoin, you can see that red line, that 20-day moving average, that is just flattened out. It's just flattened out. Everything is saying sideways here. So the fact that it's still below the 50 MA, we're going to give this a -1 and take a look at the velocity. EMA is flattened out. RSI is back to 50. Boy, there's just nothing going on here. So Bitcoin is, there's no reason to trade it. We go over here to Bitcoin Cash. All of a sudden now we're starting to see some actual weakness. We're starting to see this descending triangle pattern here. I expect this to break down probably this week. So if you can go short cryptos, go short Bitcoin Cash. We're just really waiting for a trigger here on our shorter term chart. Ethereum is looking just like Bitcoin. Nothing's going on. Look, this is a daily chart. Look, there is no reason at all to trade something in this tight of a range. When it breaks out, okay. When it breaks out, maybe you can chase it one way or the other. But until then, this is just a no trade. And Litecoin is looking a lot more like Bitcoin Cash than it does like Bitcoin. And you can see we're starting to get some momentum to the downside. So Litecoin likely breaking down and going lower this week. Let's jump into our foreign currencies, starting off with the dollar. And look, we've loved the dollar long pretty much all year. And every time people say to me, it's Rob, it's getting overextended. And I'm just going to say, look, trends always last longer and they go further than you think possible. And until we have a trend change, look, back here in August, we actually had the very first time in a long time, we traded below moving averages. We actually had a 20-50 moving average cross. And this was the only time in the past couple months that we have been neutral or bearish the dollar. Every other time, we've been trading above moving averages. They've been sloping higher. It's been a pretty easy trade to be long. So here we are. We got long dollar. We are up, just basing after this nice little run. There's nothing not to like about dollar. Dollar likely goes higher. Last week, the yen. I was looking at this yen saying, okay, the yen, we got some things working. We went above the moving averages. We pulled back. We held this moving average. I said, look, if we can clear out of this range, I will look at going long yen for the first time in a very, very long time. And the yen said, I am not ready to go higher. And frankly, I want to go lower. So we actually broke this last support. So for me, this thing is likely headed lower. So the yen is on my short watch list this week. For the first time in a long time, I've got yen trades in my crosshairs. Swiss franc, we've talked about this, so let's not talk about it too much. It's been a dead trade. It's been a dead trade. And until we get some velocity going, There's no reason. There's just no reason at all to trade Swiss francs. So just throw it away. Just put it on the shelf. It doesn't exist. Look at something else. Speaking of something else, euro looks great as well. And frankly, if someone said, Rob, would you rather be long euro or dollar? I would have to say I like the euro better here. Look, if you asked me to write an economics essay, I would write the essay on how bad it is right now in Europe and how much the euro is likely to be going lower. That's what the economists would say. Here's the problem. The market is doing its own thing, and money is moving all around the world, and it's moving into the euro right now. There's no question it's moving in. We had our trend change back here in September, and since then, it's been one of our stronger currencies, and we've got a nice long base here that we're breaking out of. I like the euro. I like the euro better than the dollar, so that is on the top of my list. Let's talk about the pound, because the pound here was a clear sell. Everything was a clear sell, clear sell, clear sell. This is where we got that big jump on the news. We sold off, and then we got more news saying, okay, at this point, just technically speaking, we have to look at this and say, okay, it just made a new swing high. It just broke its previous resistance. We are now looking for a 2050 cross in the moving averages. That's likely going to be coming this week. And we take a look at our shorter term. We've got a nice long base here with a breakout, and then we're having a little retracement, finding some support here. I like the pound too. It's a +2. It's not as great as the euro, not as great as the dollar, but the pound is definitely a tradable currency on the long side. So we've found 3 currencies we want to go long, 1 currency we want to go short. Swiss franc, we said, don't bother with it. And let's just say real quickly, don't bother with Canadian dollar. There's no reason to trade this. Look at this range. And look at all these long upper and lower shadows. Every time it tries to break out, it falls back. It's a bad trade right now. When things are a bad trade, just put them on the shelf. One day, the Canadian dollar will be a good trade again. Until then, we don't want anything to do with it. All right, here is the Aussie. Now, the Aussie is in free fall. As you can see, this thing is in free fall. Very, very steep. This means it's extended. Whenever something's extended, it means that it's susceptible to short-term rallies. I like Aussie short. I just want to get short on a rally. So anytime it rallied, take a look at these last 3 days. At one point, there were rallies. Rallies here, rallies here, rallies here. These are the points that I want to be looking for in intraday entries. Let this thing rally up. Let this thing rip higher. Let it rip higher 50, 60 pips. And then look to take a short on these rallies here. So, anytime it rallies up, you want to be looking to be short here. So I think we just wait for a rally here on Aussie and enter it on a shorter term time frame. Aussie looks great as a short. Kiwi was a little stubborn last week. Kiwi also looked like a good sell. We had 3 up days, but I'm going to say the same thing with Kiwi. Look, we just want to wait for up moves to sell into. There was a good one 2 weeks ago, and this looks like a pretty good one here. So I'm going to still have Kiwi on the top of my list as the best short of the week, followed by the Aussie. When we put them all together and stack them up, here's where we stand. Euro dollar are clearly the strongest. Aussie, Bitcoin Cash, and Litecoin are clearly the worst. Pound is also strong, and Kiwi and Yen are also weak. Everything else, don't even bother with it. When we look at the velocity score, now this is, again, right now. What's moving right now? This is really important for any of you looking to make trades on Sunday or Monday. This is where you should look first, because these are the things moving right here, right now. Euro and dollar have a ton of momentum to the upside. Kiwi isn't moving fast right now. So even though Kiwi is my favorite trade out there on the short side, I'm starting off saying, hey, it needs to prove to me that it's going to have the velocity to the downside. I'm not ready to trade this thing Sunday night. I need to see it hit certain targets and break some certain levels. We'll take a look at some Kiwi trades here in a second. So euro and dollar and yen and Aussie look the weakest. So on Sunday, Monday, I think you need to take a look at euro and dollar on the long side and yen and Aussie on the short side and wait for Kiwi to develop. So that's what we're going to do. Let's go out there and take a look at some possible trades, and we're going to be pairing up those 4 currencies. Let's take a look first at euro yen. So this is the one I like the best starting off the week. And you can see on a velocity score, there's just a lot of momentum on it right now. Look at the steepness of this EMA. Look at the steepness of the parabolic stars. We got RSA pinned up here above 70. Okay, so the big question is entry. When is it time to click the button on an entry? We did get about, let's call it a day of a base here before we moved out higher. I think that, again, I don't like to trade on Sunday night. I like to do the earliest of my trading on the European Open on Monday. Probably I'm looking at the US Open on Monday. Look, if this thing can base a little bit more on Sunday night, pull back a little bit, I like this as an entry. Let's take a look at where some potential targets are. Our next resistance is going to be up here at 145.50. 145.50. So we can take a look at that level and say, okay, that is 100 pips. That is enough meat on the bone for us to take a shot at this. So I think that's going to be your short-term target, about 100 pips higher. We'll have to take a look and see where this thing opens up on Monday. Does it pull back? Does it have a base? We'll see. But I do like this cross. I also really like Euro Aussie. So when we take a look at Euro Aussie and compare that with what we saw on Euro Yen, this is another great looking chart. And frankly, this one looks better. There's clearly more momentum on Euro Aussie than there is on Euro Yen. So this is the superior trade. And if this was a trade right now, I would take it literally right now. Everything is flashing green. Everything. So the big question is, where is our targets? And boy, we're going to have to go back to some daily charts. Ooh, where are some potential targets here? See some resistance around here. Let's see, did we already clear this support here? Yeah, we already cleared that support there. So really, all the way up here to 158.83. Yeah, that's a nice range here. We're trading at 156. That's 200 pips here. So I like this one even better. I think this has got some more upside. So just look at the chart when you want to enter this trade next week, and just do your regular charting thing. Have your setup, set up your trades and your parameters, make the trade. I do like this one on the long side. Let's take a look at $1 pair. I'm going to take a look at dollar yen. Dollar yen has been moving higher. As you can see here, this has just been a really nice high base breakout. I mean, look at this beautiful trade. And I know we had some traders catch this. We had been basing since September 22nd. Basing. A breakout here at 145. Just a beautiful, beautiful move all the way up to 149. So great job for any of you who caught that trade. It was a really nice setup. Just you had to wait for that base to break out, and then you can see it took off to the upside. It's a little extended. This big expanded range candle is telling me that's what you get on the last gasp. Sometimes they call this a blow off top. We probably need to have a pullback or a base before I'm really looking at anything else here. So dollar yen is on hold until we can get some more consolidation. In conclusion, we think there's more downside likely in equities. Friday's candle, I'm sorry, any of you who are hoping for a bullish bounce, that Friday candle is really disappointing. If you're bullish and you needed that, I'm sorry, but the market is doing what the market does. And as traders, we don't want to get locked into these rigid rules because the market is a wild animal. It sometimes follows no rules. And we try to apply rules to the market saying it should bounce here, it should do this, and it doesn't all the time. So you need to be able to throw away your premise, as we call it at Maverick, basically your trade idea, your trade setup, and when it's wrong, just throw it away. Just throw it away. Back off, reevaluate, take in all the data with a clean slate, and say, oh, okay, I thought we were going to have a big bounce here. That clearly was wrong. I took my trades off, took my losses, and I'm going to step back and come back to the market with a clear head with no preconceived notions and look at the data. And the data says the downside is more likely to happen in equities because we erased half of that gain on Thursday. With that being said, we are in a very, very stretched, bearish position. Now, look, it's not just because we've gone down a lot. I mean, that's part of it. But right now, the pessimism is insane. The level of pessimism, and I listen to CNBC in the background, and you can just hear the pessimism. Every single person that comes on is just so negative. Whenever we get to that point, that's when bounces happen. So just be wary. These bounces can come. I think you wait for them to come, let them go, and then short into them. Just like we saw on Thursday. Friday morning was a great entry for a new short position in equities. As always, follow the relative strength and weakness. We went over them today. Focus on dollar long, euro long, pound long, and we got yen, Aussie, and Kiwi on the short side. Have a great weekend, and let's go make some pips next week. Goodbye, everybody.